Let's talk about bank earnings. Two more big banks reporting today, TD and CIBC. Let's go to Grant White on this. He's portfolio manager and investment advisor with IA Private Wealth. Thanks for joining us today.
Yeah, thanks so much for having me.
So let's start with TD. Stock dragged down more than 4% today after reporting earnings, even with that $3.3 billion profit. So what were investors reacting to?
Yeah, I mean, I think that TD's gone through a lot, obviously, in the last year, well, multiple years now. But, what I liked out of the reporting is that we are starting to see the comeback is on with TD. And I think that they're heading very much in the right direction. I mean, there was a lot of restructuring going on over the last year. And there was a lot of movement, especially related to the U.S. operations. And so I think that the company's on the right track here. Now, albeit, I think that investors are still a little bit concerned about the economy and what that's going to mean, and especially for a bank that might be a little bit stifled in U.S. growth going forward. So I think that's what we're seeing from investors today. But I mean, TD's had a really great run this year. A lot of that was catching up. And so I think that, all in all, it's not a bad report, but the investors might have just been looking for a little bit more. And I think this is a microcosm of what we're seeing overall in Canadian banking at the same time.
Okay, given the cap on American retail, which you had alluded to, how much of a drag is that going to be on TD moving forward?
I mean, that's the real question, right? I mean, I think that the uncertainty around what that's actually going to mean for the bank going forward is a challenge. And so, we have TD listed as a hold today for a lot of that same reason. I mean, admittedly, there was a lot of growth that, investors could have taken up as TD shares caught up this year. But ultimately, a challenge that we see is that growth. I mean, we just, in a world where they have limited growth opportunities in the U.S., they're going to be looking for other areas. And for us to dive back into TD, I think we need to see more clarity as it relates to that and what it's going to mean. So, what it's ultimately, how much is that going to stifle the bank? I mean, I think that's really the question. And with that uncertainty, there's just other options out there. And so, it's not something that we're wading into at this point.
Let me ask you whether or not they're still dealing with the U.S. penalty, which was $3 billion from last year.
Well, I think they're dealing more with the perception of it than anything else. I mean, I think at the end of the day, I mean, the monetary side of it, not as big of a deal. But I think that really what we're dealing with here is the perception of what that means still going forward and where this company is going to find growth. I mean, the U.S. was a big part of their growth strategy for many years. And so with caps on that, we have to wonder where TD is going to go next. And so I think it's more perception than anything, Morella. I don't think it's actually a hard fact or a hard problem that they're facing. They've gone through the real hard work, I should say, the heavy lift this year with the restructuring and a lot of that. There's probably still some more work to be done there, but in saying that, the heavy lift has been done this year. And so I do think that TD's coming out the other side of it. The growth factor, that's the concern I would have. What is that ultimately limiting to? Time will tell.
Got it. Okay, let's get to CIBC because they're not in the same position. They beat in trading revenue and domestic retail banking. So where can CIBC grow?
Yeah, good question too. I mean, I think CIBC is a really interesting one. I mean, from a stay-at-home perspective, the company is doing very, very well. Obviously, we saw a nice beat today. From a valuations perspective, it's actually one of the best opportunities that you can find in Canadian banks. But I also still think that there is a bit of a limited growth opportunity here as well. And so that's one of the things that we're weighing out is in order for this to be a good, strong buy for us, where do we need to see the growth? There is expansion opportunities. I mean, they've got some U.S. opportunities as well as some other places. But one of the things that I think is still holding this company back as well is the concerns over the Canadian economy going forward, and how much tariffs and everything else is going to play a factor in the short term. So, given that their exposure is a little bit more Canadian, that's one of the challenges that we see with CIBC. But in all of that, great report. The company's looking very strong. Management's doing a very good job there. I think there was a huge lift in capital markets. I think it was up 87% or something like that. So, the management's doing a really great job. Nice dividend yield. So, a good company that you could hold on to for certainly a long time. It's just the growth opportunities. I just think that there's better opportunities out in the market.
Okay, so can I get your just general takeaways from the latest bank earnings generally? And I understand EQB, of course, will put aside, and TD's a little bit of a special circumstance with that cap in the U.S. But what are you seeing if you're taking points away from what you've seen with their earnings? What is your takeaway?
Yeah, great question. Overall, generally pretty strong. I mean, actually, I'd say a bit surprisingly strong in some cases. The banks are performing really well, and I think this is a testament to, their management. It's also a testament to the fact that perhaps we haven't seen the economic downturn that everybody thought was going to happen yet. Is that still going to happen? Are we still waiting on some pain from the tariff story and the trade war? Perhaps. And so I think that everything's looking very good. I mean, looking at the reportings, I'm generally quite positive in all the reports so far. Canadian banks are looking quite strong. Management's doing a great job. There's still this overhang, though, in my opinion, of what did tariffs and the trade war ultimately mean? Are we going to see a deeper slowdown, and what is that going to do? You see the banks are lifting loan loss provisions, reducing them slightly this quarter as well. So obviously they're feeling more confident about where things are going, and that's a very good sign, obviously. So all in all, I'd say nice surprises to the upside. Not surprising because they're well managed, but surprising just to say that we haven't seen the economic pain that a lot of people were predicting. So everything's looking pretty good.
Grant White, I do have to leave it there with you, sir. Thanks for your time. Grant's portfolio manager, investment advisor, IA Private Wealth.